let's go through some of the names, because you're long short and you're not afraid to talk about some of the shorts either, which is rare. Let's hit some of those if I could. Netapp, NTAP, Netapp, you are short, and it's one of your top shorts. Why that?
Yeah, I mean, it's sort of like it fits into sort of the other side of the thing that I talked about, like being able to find companies that can successfully transition during these periods of rapid technological change. I mean, Netapp, as you know, was a storage box maker that did well, but right now it's sort of a mature company that's had some difficulties, transition to this new paradigm, particularly with the cloud and SSDs, solid state drives, which brought in a lot more competition for Netapp. In addition to that, the environment that we're in now, where there's a challenge on the spending side by enterprises, has been a negative detriment to NetApp business. We think that the company hasn't been as successful in this transition to the public cloud as some of the competitors have been, and that's one of the reasons that we're short the stock.
How about ADP?
Again, ADP is one of these types of companies that's geared to the swings and arrows of the employment situation. It's a payment. ADP is a payment processing company, which obviously there's going to be a high correlation to what's happening on the employment side. They do have an HCM cloud-based solutions business, which is a bit more stable. But to the extent that there might be some permanent dislocations with employment, we think that ADP is going to have a difficult time getting back to those old premium valuation levels.
Let me get through a couple of other of your longs before we go. And it's a company that we've never talked about on this program. It's 26 Incorporated. Tell us what they do, why you like them so much.
Yeah, so 26 is one of these companies that have made some acquisitions and have been able to successfully transition to some of these powerful thematic things within technology. Their primary business has been, like as you said, in electronic materials, but 26 made an acquisition in the optical component space, which was in much need of consolidation. They bought a company called Finisar, and on their most recent earnings reports, actually the company has experienced a record backlog in their broadband products. And with the acquisition of Finisar, they gave the company a foray into 3D sensing. They struggled initially, but now they've started to ramp up production, and they're now a second source supplier to Apple. And we think that's going to be a long, growth driver for this company. It has a long runway within the Apple ecosystem, as well as the Android ecosystem.